Sumita, if you ask me, I think this rally has a lot more legs to, take the markets higher from where they are. And I say this because, markets were already at a time just before the ceasefire got announced and stuff, were already at a time where fundamentals were India were actually improving minus the terror attack. IMF forecasts were giving India very good. Growth projection, and things were going really well, and things that are playing out now have a lot to do before the events of April. And I say this because US markets have been expensive. You look at S&P 500, which typically trades, historically has traded at an average of around 18 and a half, is trading at 28, 29. So US markets are extremely expensive. Indian markets, on the other hand, are trading at, their fair valuations close to where they've traded on a 10-year basis. So money was beginning to move to India because, if you look at FII data, they basically turned positive on India after about 8 months towards the end of March. So they've been net buyer in India since about 25th March till now. I think in the month of May so far, they've on a net basis bought about 23,000 crore of Indian equities. So these are the reasons which, up. And I expect this to go on because US markets are still far more expensive than India. So as money moves towards emerging markets, India will get a chunk of, the largest part of that flow because one, India is obviously the fastest growing large economy right now, as per the IMF projections as well. And two, right now is available extremely cheap. And actually, there's another reason that the tariff war between the US and China has not really completely settled down. But between India and China, they've agreed to zero tariff policy on most of the products. So all of this augurs really well. Add to this the fact that inflation has come to a 13-month low. So it is a given that in the next MPC meeting, which is scheduled for 4th of June, it's a 25 basis points rate cut is a given. So all of this should, in my view, take the markets higher from now on, like next 2-3 months on a short-term basis. But otherwise also, even from a medium to long-term basis, Indian markets are in a very sweet spot.
Let me come to you on the point of this conflict, Rajat, between India and Pakistan. There's been an understanding that's been arrived at least in the interim. How are investors like yourselves looking at this? And is there a concern that you see with respect to this development in the market? Although Jeff has said that there are going to be, if at all there are risks involved, if at all there are going to be headwinds for the market, it's only going to be global.
I would agree with that view because the risk that we face from Pakistan and stuff would probably, if history has anything to go by, then this kind of thing flares up every time there is a terror attack, every time there's an act by some crazy lunatics who just come in somewhere and do something stupid. And if history is to go by, then every time an incident like this happens, there is a period of zero terror activities, zero infiltration in India for a foreseeable future. And nobody is crazy to go to a war for no reason. So chances are that nothing's going to happen for the next few months or few years for the foreseeable future after how Indian government and military establishment reacted to this incident. But hey, look, with the kind of neighbors we have, you can never be sure of when things go down and when something. But we've learned to live with it, haven't it? Haven't we? Because when the 24th April event happened, everybody was sure that Indian government will retaliate, but markets did not really fall. And even when the skirmishes and sort of the war, if you may, broke out, the markets did not react too much, although it lasted only 80 hours, but it did escalate to a point where, under normal circumstances, it would have escalated. So I think it's like the new normal. So even if something happens, infiltration or some kind of renewed ceasefire violations, firing at the borders, unless something major happens, I think we've learned to live with it. So this is not going to have any major impact. I do agree with the point that, what happens at the global tariffs front, anytime if there is any disagreement between some of the larger economies, particularly the United States and China, that could have an impact on, all the economies. Because, previously also the problem was essentially between US and China, but then there was a lot of, dumping of products, or the fear of dumping of products in India. There was a fear of slowdown in the US, because of which Indian technology companies started correcting a lot, and they've still not regained to, where they were trading before this whole tariff talk started. So yes, that I think the global tariff issue is still a bigger issue than whatever happens with Pakistan. I don't think, I think this issue is done and dusted for now.
On the India-US trade deal front, things are moving smoothly. So which trade deals particularly seem to you risky at this point?
Short answer is neither. Because I'm convinced that over time all of this would settle down, and no matter how you look at it, there will be, quite frankly, there is not much happening from India to the US which could impact any of the. India is still by far, when you talk about listed players, a very domestic play. Barring pharma and barring auto ancillaries, I don't think anything in the listed space is going to get deeply impacted by US trades in the first place. You have automobiles. Tata Motors was, I was looking at this one company, could get impacted because JLR, Jaguar Land Rover, which is about 65% of their revenue, they had a 28% tariff slapped on them, because that's a subsidiary which is a UK subsidiary. Now that has been reduced to 10%. The latest round of talks, Donald Trump said that India has agreed to a zero tariff for most US products, and we've agreed to the same. But then he changes his statements pretty regularly. So I don't know how eventually it will all pan out, because, pharmaceuticals, if you were to talk about most of the pharmaceuticals that India sends to the United States are actually, they're not going to be able to set up a plant overnight. So if India stops supplying those pharmaceuticals, they're not going to buy alternatives immediately or set up plants there. So even in case tariffs are high, what will happen is it'll get passed on to the US consumers. So that's for pharma. And in auto, things have anyways started looking like, they will even out with time. Banking and defense and railways and a lot of these other sectors that I'm looking at, FMCG, they're pretty domestic. So Indian economy that way is not unlike China, which is manufacturing and sending a lot of stuff to the US. India was anyways not sending a lot of stuff to the US. What we're sending to the US is services, particularly, in the IT sector and stuff. And that could get impacted if there's a general slowdown in the United States and companies there stop paying so much to Indian IT service providers. So, frankly, I'm not, and I've never been worried about what comes out of this tariffs. Or, as Jeff said earlier, the repercussions for India, the worry for India would be what happens between the tariff problems that US and China have of their own. If there's high tariff on some of the things, like, there's high tariff on steel for that matter, although China sends very little to the US, for a while, a lot of it could get dumped in India at a cheaper price and in other countries. Those are the kind of worries that you have, but not particularly between India and US per se.
Buying continue in the next coming few months, given the fact that, the kind of discussions that we are having, that India has very little risk, at least domestically. We have very solid macro factors supporting our economy and hence the markets as well. Do you see a continued push by FIIs, and which sectors do you feel are, opportunity moments for investors?
Yeah, I think going forward, for a moment, if you just forget about this whole tariff situation, let's say this never happened. And even otherwise, the point I was making earlier, the first point I made was Indian markets right now, from a valuation perspective, are so much better placed than the US. You have an S&P 500, which has traded at a price to earnings multiple of around 18 and a half for the last 8, 10, 15, 20 years, no matter how long you look at it. It's today trading at a price to earnings multiple of 28. With this backdrop, you have a situation where dollar is getting weaker, which makes it more attractive for foreign institutions to buy India and other emerging markets. India right now is fairly priced. China has, a lot of uncertainty around what happens with the tariffs eventually. So obviously, a lot more money will flow into India and will keep flowing into India. Now, which sectors will FIIs buy? You have to look at which sectors they have traditionally bought, and I think that's financials. That's where they buy. And a lot of the FI buying in India happens in frontline indices. And our frontline indices, if you look at Nifty 50 or any of these bank nifties and whatever, are dominated by financial services. So their favorites, the likes of HDFC, Reliance, TCS, Infosys, maybe technology stocks, because technology is right now available at very, very cheap valuations. Having said that, I do agree with the point that there is a very genuine risk of some slowdown in the United States. Both stock prices could come down and there could be slowdown because of, quite frankly, I am not really sure of what the administration there is trying to achieve by talking about all these tariffs, because they go up on tariffs and then, the countries around the world either get into a deal with them, barring China, which keeps increasing tariffs, and then they come to a point where something which is worth $100 is now $250 with $150 of tariff, and then this madness has to end somewhere. So they come back to the bargaining table. So I really don't know what's going on. As for the trade deal which India and US are entering, a lot of times it comes as news to, I think, us also. And I think that's a very general sentiment when Donald Trump says, we've agreed to a zero tariff for most US products. Everyone here looks around and says, who agreed to that? Like, because nobody really knows what's the what's the tariff on which product. Nothing's been written, nothing's been put on record. So I don't look at it in so much detail as much as I look at companies and their valuations and their growth potentials. I think every time, in fact, the past few months, every time there's been talk of tariffs being imposed on certain sectors or certain companies in India, every time I've looked at that, I've realized this should either have a positive impact or no impact. I tell you why I say that. Tata Motors, I was talking about, the tariff was, vicarious. It was because Jaguar Land Rover sells a lot in the United States. Steel companies, there was tariff put on steel. Top five steel companies of India, JSW Steel, Steel Authority of India, Jindal, zero exports to the US. So how do these companies get affected? If at all, they'll get affected because there could be some dumping in India, so Indian steel prices could come down. Even with tariff, if we could sell this steel in the US, the hot rolled coils, the price here is anyways 30 to 35% cheaper than what it is in the US. So no matter how you look at it, this seems to, I've not seen a single sector or single space where tariffs have a direct impact on India. So I'm not really concerned about that. And I think to answer your question, a lot more money from FIs will keep coming into India because they don't have many choices where they could take their money unless they want to, keep investing in an extremely overvalued market like the United States, or in an uncertain market like China. Between the large growing economies, top 4 or 5, India is probably, I don't say this because a lot of my investments are in India, but we do invest in US. We've pulled out money from there. And I think going forward, India looks far more attractive than most other places.